Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Friday, the 18th of February. Starting off with Cloudbreak Discovery, which is looking extremely good indeed. We've had this mid-for-move consolidation, and just looks like we're breaking the initial high that we had for February around 5.1 pence. End of day close above that, we could be heading up to 9 pence, given that this is, in theory, a mid-move consolidation and a bull flag breakout. So 9 pence maybe as soon as the end of next month or even sooner. Onto a stock which I haven't covered for quite a while. I used to cover it when it had a different name, but Amala is next. And here we can see that after quite an extended basing for the shares, we've had a break of the 50-day moving average around 0.5 pence. Above that, you could see the shares up to 1.1 or 1.2 pence at the top of that broadening triangle from October. But obviously, this is not a very liquid situation. And the key is also that we hold above the 50-day line in the meantime ahead of any move to the upside. Some might argue that, in fact, just approaching the 200-day line might even mark the end of the rally. Moving on to a stock which have missed out on the recent rise, but brilliant move here. The situation is that we gapped up off support, held the gap, and that's normally a very good sign. Gapped up again this week and are fast approaching the notional technical target that we had set some time ago, probably back in December, at 3 pence. And in fact, the way things are going, probably justified in even looking for what the next target might be for Egdon. At this stage, something along the lines, literally, of the line that I'm drawing now. So from back in August, August resistance line projection, 4 pence is the target there, while we're above, let's say, 2.2 or 2.3 pence, I think, in the meantime, and 4 pence by the end of next month. Another situation which is looking quite interesting is Europa. Here we've had the retreat from the late January peak, but we held the gap, the January gap, which is a very strong sign, found support at the top of it, an extra strong sign, golden cross earlier this month, so basically above the January peak, 2.12, looking for 3 pence at that June resistance line, quite similar to the EDR chart there. Onto a stock which has also pulled back a lot from its highs, GST Technologies. I suppose the game here is to try and work out how far it will retrace from the 3 to 3.5 pence October peaks. Looks as though we've got the floor of the rising trend channel there from September, or September support line there, around 1.45. So above 1.45, we could head back to the 50-day moving average around 1.9 pence. But obviously, we need to see that support come in, which hopefully it will over the near term. Big picture here above 1.45, looking for the top of the channel and retesting October resistance over the next maybe 2 to 3 months, something like that. On to a stock which is certainly in full flight on the bull front, Hurricane Energy. Actually, it's always nice when the top of the trend channel is broken, and that's been done here around 8.5 pence. So I suppose, once again, the game is to try and work out what the next target here for the shares may be, possibly up towards a line of resistance from August there, and that's heading currently towards as high as 12 pence. So above, let's say 7, allowing for a bit of wiggle room up to 12 pence by the end of next month, especially given the way that we've got a very strong looking rise for both the 50 and 200-day moving average. One of the heroes of the week has been Encondezi, which after years of struggle has finally gone into vertical mode, if I can type out the right letters there. Here we've got broadening triangle, top of the triangle there, heading for 2 pence, and decent weekly close today above the 200-day line at 1.8, or at any time is the hopeful trigger for a move to 3 pence, and the top of that September broadening triangle. So great recovery there for Encondezi. I just missed out this one, the one I wanted to look at, Macango. Here we've got the possibility of a bear trap from below January support, so that was around 25.5 pence. Above that, on a weekly close basis, we should hopefully be heading back to the low 30s, and post-November resistance for the shares. Stop loss obviously back below 23.5, the February floor. On to Open Orphan, which has been pumping away with the good news in the recent past. We've got this broadening triangle there from back in July. Shares finding support there around the 16 to 17 pence level, and as long as we hold that, then one would be looking for a return to the mid-20s by the end of next month, or something along those lines. Bit of bullish divergence in there as well, so slightly lower lows for February on the price chart, but higher RSI trace, so that does suggest that we may be finally near the end of the pullback that we've seen from actually as long ago as April last year. Onto stock which is also trying to revitalize itself at the moment and doing a pretty good job. Skin Biotherapeutics. Here we're going into a little bull flag, which is well above previous resistance, around 46 pence. And the longer we remain above that old December resistance, 46 pence, the greater the chance of a move back up to the 70 pence zone, so 71, 70 to 75, something like that by well, I suppose over the next 1 to 2 months, maybe not by the end of next month. That might be a bit ambitious, but this is a good-looking setup with a rising 50-day line, so it may surprise in terms of timing in a positive way. On to Serenus, where we've had multiple tests of the 1.5 pence area. Looks like this should hopefully be the last time we need to test that area. 50-day moving average rising, bullish divergence line as well, so that does promise at least a retest of the 2.25 pence area, which is post-September resistance, maybe up to 2.8 by the end of next month if we take off properly, as it looks as though we are with that big volume spike that we had yesterday. On to the, so let's call it the novelty chart today. We've got Supply Me Capital, which is another situation where after the peak last March, it might be the turn of the shares to try and have at least an intermediate rally back up to sort of 2.25, 0.3 at that October resistance line. The reason for saying that is it looks as though we're breaking out of this falling wedge in place for much of the last year. And also we've got an uptrend line there in the RSI window, bullish divergence line, so that does or should provide decent momentum, enough momentum at least to break that resistance line there from last March around the 0.15 pence level. That's it for me today. More updates over the weekend.